This is Movers and Shakers, where we interview the upcoming generation of Make It Happen multifamily investors to share their story.
Welcome to the Movers and Shakers podcast. My name is Gino Barbaro, co-founder of Jake and Gino, multifamily investor, educator, father, mentor, and I am joined by my co-host, my brosif, Joshua Ryan Rusin, community director of Jake and Gino. Josh, how are you doing today?
Gino, doing well, my man. Super excited. We've been slamming and jamming over here, definitely just making things happen, growing the family, adding value, and students are getting deals. So it's super excited. How about you today?
I'm doing good. You didn't get the memo this morning. You're supposed to have a pastel color shirt on. And the green is not working today. We're supposed to be matching today. You know what I'm saysaying, bro?
I'm kind of digging the bright colors you're wearing. This green is like a foresty northern color. So I got to keep doing this one.
Let's get to the guest today. Why don't you introduce our guest today? I mean, this is going to be a great show. This is like an MIH you're on today. I'm really proud to have him on today.
Yeah, today we're featuring John Crouch. So a little bit about John. He actually serves as the Vice President of Investment and Strategic Planning for a Nashville-based commercial real estate firm. Prior to his time in commercial real estate, John worked as a senior financial analyst at Cigna and a tax professional in KPMG's New York office. He received his undergraduate degree from Cincinnati Christian University and an MBA from the Fordham University Graduate School of Business in New York. Now, John began his real estate portfolio with a self-funded 32-unit property in St. Louis, Missouri. The property has completed a significant capital budget program and is now enjoying increased rental income as a result. Right after that, he syndicated a 122-unit property north of Indianapolis. Today, John is focused on expanding his knowledge and expertise within the multifamily asset class. In his spare time, he enjoys spending time with his growing family, underwriting potential deals, and becoming a general aviation pilot. Wow. Welcome, John.
Thank you.
So John, I got to hear about it, man. Most people think there's this natural evolution in real estate where wholesale maybe, do a rehab, even a single family rental. You didn't play around and scaled up. Tell me a little bit about that.
Yeah, definitely. So I've always been interested in real estate and kind of got my start looking at single family homes in the Nashville area. My thought process was, let's get something in the 120 range. Let's rehab it for 25, 50,000. We can refinance some cash out and just rinse and repeat. And so I was looking heavily. I was looking at single families here in Nashville, duplexes, triplexes, quads. And I was just having a hard time. My underwriting, I come from a very Excel-based background, both in tax and financial analysis. And so I just couldn't get my numbers to work in the Nashville market for those smaller houses. At the time, I still have a family friend who's in the large multifamily development. He has properties here in Nashville, Austin, Denver. And he was at my 2-year-old's baby shower. And I was talking to him about, the struggles I was having with trying to get into the real estate market. And he's the one that really challenged me. He's like, if you can't make it work on a 2-unit, go try a 30-unit. He's like, I guarantee you the synergies of scale are going to allow you to underwrite to your vacancy criteria, underwrite to your capital budget criteria, and still hit the returns you're looking for. And so I kind of dove into multifamily, started doing my research, learning, and then just diving into the underwriting.
So John, why multifamily?
I think multifamily to me was something that it's always going to be there. I think I kind of fell in love with multifamily when I was living in New York, specifically in Brooklyn. When I found out, I was paying $1,800 for a 700 square foot 1-bedroom. And I just assumed that the landlord bought it for millions and millions of dollars. And come to find out, she bought it back in early 1990s and got it for about $200,000. And that just really got me thinking that, the way that rents are always ticking up. And if you can lock in something and buy it at a good basis and hold it long term, you're really going to build a lot of wealth.
So when you bought your first deal, it was out of market. Give me some of the myths that you had or some of the fears that you had doing that first deal.
Oh, yeah, lots. I was kind of a lone wolf at the time, and I was really afraid of being able to find something. I was really afraid of reaching out to brokers and then kind of basically proving my novice status with multifamily. I didn't think I was going to be able to talk to bankers. I didn't think I was going to be able to talk to brokers. But I really came to find out that there's a stair-step process with your learning. I mean, I think my first fear was how do I write an LOI and get this taken seriously? And so you write a few of them and you fail, but then you learn. And so you get past that stepping stone. And the next stepping stone is, how do you get it to contract? How do you get financing? And I feel like I made a lot of offers along the way that I got to progress slowly down that path. I didn't get my first few closed. I didn't get my first few through the LOI process, but eventually you learn enough along the way that you get all the way down to the end of the path and you finally get it closed and you start to go down the operations side. How
did you choose the market?
To be honest, I was more deal focused. Being involved with the Jake and Gino community is really it's changing my mentality of being less deal focused and more market focused. And so that's been one big benefit for me moving forward. But looking back, I mean, I basically drew a circle around Nashville and said, where can I get in 5 hours? I'm willing to drive 5 hours to find a deal. And I was just scouring every market, every source I could find. The 32 unit in St. Louis actually popped up. I found a deal on LoopNet, wasn't a good deal, drilled down into the broker, found the broker's website. He's a small St. Louis broker that has kind of pocket listings here and there, and made a good connection with him, found this deal right before it hit market, put an offer on it, and we were off to the races.
So I should have asked this question first, Josh, but I slipped my mind. What did your wife think about you going into multifamily? Because you corporate jobs. See, I got the laugh. I'm actually going to start a podcast with my wife, and the first show that I'm going to do is, how do you get that spousal stink eye when you got to pick up the phone or you make a comment like, really, you're going to do really? So what did your wife say about it?
I'm extremely blessed. My wife has been completely supportive. She took some time to kind of understand. I think her rock that she could stand on was that she knew that I wasn't just swinging for the fences. She saw me putting in the work. She saw me reading every morning, spending my lunches in my car, listening to the Jake and Gino podcast, listening to any other podcast I could get my hands on. She saw how much I worked on the education front and the preparation front, that when I finally got to the point to actually purchase an asset, she was ready and excited, and she's been right with me along the way.
So that's awesome, everybody. Listen to what John said, and it's really important because I have the same story that John did. My wife saw the pain of my current situation that I was in. My wife saw the hours I put in before work, at lunch at work, at nighttime. I went to coaching school to better myself. So she saw all the hard work that I was putting in. And ultimately, if I failed, it wasn't because of not trying. So, and if I didn't take that chance, I would regret it for the rest of my life. So she was really on board, the same as John's wife. And it's important that it's either sell or be sold. Josh is always selling me on something, right? So I think you really need to sell your partner, not in a bad way, but really in that way that you're giving it your all, because my wife with 6 kids gives it her all every day. So the least I can do, if I'm going to take on a new venture, do something new, I've got to be bought in and I've got to sell her on the proposal. And then the multifamily is also, the other thing is the lifestyle. I mean, you want to talk about having a better lifestyle, controlling your future, being able to provide for the family. All that comes in with multifamily. And I can be the first one to tell you, I was in New York for 2 weeks. My lifestyle didn't change. I was there. I was working as I was up there. I mean, it was a vacation, but I could pick and choose when I wanted to work. So all these things, it's really important to get a spouse on board and to make them bought into the process, because, when you're successful, when you're able to refi a property, sell a property, you want to be able to enjoy that experience with them. So I think it's really important. And I'm glad that your wife's on board, because that's something that going down the road, we're going to have bumps in the road. There's going to be problems. There's going to be properties that aren't paying 1 month or whatever. So it's really important that you get them on board. What mistakes did you make on that first property that you saw that, I could have done something differently here?
Yeah, definitely. I think one thing is being more market focused. I think I was kind of looking at, I knew I wanted to get something in the 30 unit range. I believed in the synergies above 30. And so I was willing to kind of buy on a budget. I know, Grant Cardone preaches all the time, don't buy on a budget, don't buy on a budget. And although I understood where he was going with it, I still have limited cash. I'm not going to go out there. I didn't feel comfortable raising money at that point, because I wanted to put my strategies to real life. And so I knew I was sticking to my 100% my own capital. So I think focusing on a market, drilling down on a market, building those broker relations is definitely something that I learned. But from a property level, I learned that a rent roll is only as good as those dollars are hitting the finance, the bank statement.
Yep.
I reviewed the rent roll and I reviewed the property and I reviewed, the expenses and all that. But the one thing I didn't do was I didn't tie the rent roll to the bank statements. And so that was my big takeaway from that one, was how to take it to the next level, dig down to the source of your underwriting. And the source for my rents were the bank statement. I didn't do a great job. And so I kind of learned that in the first few months, that we weren't collecting as much as I thought we should have been collecting. And that was a big focus for me and my property management team. And, we righted that ship and we've been cash flowing since.
That's awesome, because the Jake and Gino platform, we talk about due diligence, and we talk about that. And two words that everyone should take away from the podcast: it's economic occupancy and physical occupancy. Just because there's a body in there makes it physically occupied. If they're not paying, it's economically unoccupied. So you can have a 95% physical occupancy, but a 78% economic occupancy. And if there's any Memphis and Tennessee investors out there, you'll know what I'm talking about. And it's really important that you go through that you get the last 3 months of bank statements and tie them in with the rent rolls. It's crucial that you do that. So, buyer beware. You have to trust but verify as you're going through the due diligence process. And I think the education really helps you. I mean, if you can learn that one tip and you can go back and retrade and say, hey, listen, I've got less money here, and you can go back and retrade, take $20,000, $30,000 or $40,000 off that price. That's a huge savings, and that's a fair retrade. I want to go back to something you said about budget with Grant Cardone. What do you mean by that? Do you mean by the size of the deal? He says, don't worry about the size of the deal.
Yeah, I mean, obviously Grant's in a very different place, but I think what he wants to keep people away from doing is buying a property because you can afford it, and reaching for a property that maybe is a little bit outside of your comfort zone with respect to purchase price. But at the same time, it was something that I just wasn't in a position to do. I only had so much cash that I could go out and buy a property. And so I was limited in the total purchase price. Whereas he wants you to buy the right property and find the money afterwards.
So Josh, I'm going to throw a big word in here, right from James Clear's book, Atomic Habits. It's called the optimal level of difficulty. If someone's telling you to buy a 100-unit deal and you can't afford to, that's the stupidest advice you can ever take, because you're never going to do it. But if I tell John, think big, but start small. Start with a 10-unit or a 15-unit. If that's what you can afford. You get in the game. All of a sudden, you have proof of concept, and then you get educated, because I'm sure John already knew about syndication, about raising capital, about possibly partnering, and then all those other options start coming in. Once you get into the game, start where your optimal level of difficulty is. Like John said, he had problems putting in LOIs. Put in LOIs, and then once you learn that skill, you can get into the next skill. But if you're looking at something that's unattainable, or at least in your mind it's unattainable because you've never done it before, you're going to have that analysis paralysis, and you're never going to do it. So my advice to anybody out there is, if you have to start with a duplex, fine, start with a duplex as long as you start. Because there's one thing that I've learned: you either do 0 deals or you do multiple deals. You're not going to buy one deal and then stop from there. John is proof in pudding. He started with a 32-unit deal. Then he graduated up to a 100-unit deal. His next deal is going to be bigger because he's already learned how to manage a small property. He's seen the inefficiencies with the small property, and there's nothing wrong with small properties. I still want to buy small properties if they make sense. But as you start learning, your optimal level of difficulty is going to get bigger and better and better. And a $2 million raise a year from now, he's going to be able to raise $4 million because he's already done the $2 million. Does that make sense, John?
That makes perfect sense. But I'd like to say that $4 million is going to, let's go for 6 months instead of the year. But also, I mean, I think every person that I've talked to in this industry, the two pieces of advice I get the most is start sooner, hold longer. And so to your point, yeah, just get out there and make it happen. Get that deal under contract, even if it is a duplex, quad, whatever. Just get going on it, and you'll build from there.
So what made you pursue education after you've done your 2 deals? Because Josh and I have this great acronym that we like to use. I haven't used it on the Jake and Gino, on the Movers and Shakers podcast, excuse me. We call it the dig jammers. A dig jam is somebody that says, damn, I'm good, just ask me, right? And we have a lot of those people, and most of those people out there have no deals. And so somebody who had over 100-unit deals, what attracted you to education? Did you have any holes in your education? Did you want to learn more? What were you specifically looking for?
I think for me, I found myself that it was easy for me to find, a lot of the free advice out there, the low-hanging fruit, the podcasts, the books, the YouTube videos, things of that sort. But I really wanted a one-on-one connection. I have been hooked up with a great coach in Bill Ham, We've been working through not only my strategy for finding deals, for underwriting deals, for acquiring deals, financing deals, raising equity, but he's also helped me on the assets I have under management.
Mm-hmm.
So he's been a great resource for, the roadblocks we're coming up on, my smaller property in St. Louis and the larger one up in Indiana. And it's just been, it's been perfect for me. It's just been a sounding board. I tend to be a lone wolf. I have a great business partner here that works with me with our syndication business. But at the same time, I just wanted more people that I can talk to, bounce ideas off of, and learn from. Even the community on Facebook and the accountability pods that are in the group. I mean, just talking to people in this industry, iron sharpens iron, and I feel like I'm growing so much just being in front of those people on a regular basis.
And John, you've created a credibility book, correct?
Correct.
So please share that with us. I want to put it in the show notes because he did an amazing job, because that's one of the things you learn. You have 100 units, how you convey your message out to potential partners or investors. You had the problem, how do I get in front of them and make myself credible? You need to create a credibility book. Look at John's book. I mean, he showed it to me about a month ago. It is beautiful, Josh. You got to take a look at it. You read it, you know exactly what John's doing. You know exactly what he's done. You know exactly how he's going to make money. You know exactly his whole strategy and his business plan. So kudos to John. What are the next steps for you in multifamily? What are you looking to do in your next deal?
Yeah, so we right now we're looking for our next syndicated deal. We've kind of focused in on a couple markets kind of near Nashville. We really like the economic metrics of Indianapolis and Atlanta. We love the future looking population growth and job growth. We like the job diversity. So right now, I'm busy building a lot of connections in the brokerage community, looking for those deals, looking for those potential places. I have a great debt team in Doherty Mortgage. Zach Shope has been great helping us look at deals from the debt side. But at the same time, they have deals that fall out. So sometimes we get deals come our way from them. He's been introducing me to some people. I think our big challenge right now is we want to continue to scale up. The 122 units in Northern Indiana was a $6.5 million purchase, $2 million raise. We want to go bigger, but we need a balance sheet partner. And so we're really looking for someone that kind of can believe in our strategy. They can kind of bring their balance sheet to our GP to take down deals that are going to make everyone more money because we're able to scale up into larger properties.
I like that. Well said. And I love, John, I definitely have some clear takeaways that I want to dive into from the show that have really stood out to me. So the first one, and this is a good acronym that Gino's going to like, the 5 Ps. So proper preparation prevents piss poor performance. So early on, when you said the due diligence, right, there are things you would have learned ahead of time, but that proper preparation is going to help you get the right steps and not learn from the school of hard knocks. The second one I really want to hammer in there is you don't have to be great to get started, but you have to get started to be great. So when you first started, no one knew everything. No one's born with this knowledge. You took massive action and you failed forward. And then even more so looking back, you realized, hey, I can reach up. There are people that have the results that I want. Why go out there and learn from the school of hard knocks and reinvent the wheel? And you said, look, if I can compress time and get those results sooner, I love that. And like Gino mentioned, the average person, when they start getting some results, they gain the sense of confidence where they know everything. What I've learned by surrounding myself with people that are well above me is they still have a beginner's mindset. They realize they don't know everything and they're always radically open-minded and continuing to learn. And I think that's a trait that I see in by far the most successful people. And then lastly, there's levels to it, right? As you grow and scale, that 20 or 32 unit came with different challenges than the 122 units. So as you continue to do that, you're reaching up, knowing better, and doing better. Gino, give me some takeaways.
I think the most important thing, Josh, is that I've learned, and I've done this my whole life, and I think it's led to my success because I am not the smartest person on the planet by far. I have a lot of shortcomings like everybody else, and Josh will be the testament to it. I commit, and then I figure it out. I'll send that email out, and Josh is over there worried. He's sweating bullets. Should we send it out? I'm like, dude, we send it out. If we screw up, we can always figure it out. But if you never send that email, you will never know. If you never put in that LOI, you will never know. Don't confuse motion with action. Okay. John had a lot of action. Now he's going back and doing a lot of motion because he's analyzing, he's working with his coach. He's doing a lot of behind the scenes, but he committed. He took a lot of action. And now don't confuse those two because it's really important. We need to do motion, but motion doesn't bring the results. Action is what's ultimately going to bring the results. Putting those LOIs in, getting in those offers, getting the PSA done, raising the capital, closing the deal, repositioning the property. Those are all massive actions. And, what John did is he committed it, then he figured it out, and then he actually got educated. I would say get educated first, and then you might not buy the 32 unit, but there's nothing wrong with it. See, everyone thinks that might be a mistake, that he didn't get educated first, but it worked just as well because that led him to the education to say there are different ways to look at things. And most people, when they get confronted with multifamily, Josh, they say to themselves, well, I can't afford it. I'm not going to have enough money. I got to wait for the market to turn. If you're in it for the long term, there's going to be multiple market cycles, right? So you need to learn how to get into it. You need to know multiple strategies, whether it's syndication, whether it's partnering with somebody, whether it's buying your own deals. There's so many different ways to get into it, or whether it's raising money for other people's deals. You need to figure that out for yourself and then say, okay, it's time to actually commit, and then I'll figure it out. As long as you know 70% of it, as long as that email is 70% good, Josh, let's send it out, right?
Love it. John, you're clearly an MIH guy, and I really have two questions for you, and I'm excited to hear your answers for both of them. One, what's your best advice for anyone trying to buy their first multifamily property?
I think my best advice is just get out there and just keep underwriting deals. The more deals that you look at, the more understanding you have of where deals are trading or where brokers are wanting deals to trade, you're going to be ready to, when a deal pops, you're going to know it. And I think that's where I was when I bought the 32 unit. And that's where I was when I bought the 122. I had analyzed so many deals in those different markets that when these deals hit, I knew that they were good deals, and I knew that they were ones that I should go take down.
That's awesome. I love that, Josh. Let me plug in. I'm sure your coach, Bill Ham, will make the testament because he's told me multiple times, 80 deals looking at will lead to one. Now, that doesn't mean driving out to 80, but like John said, the first 5 or 6 or 10 are going to be hard. But then as they come across your desk, well, this property is $80,000 a unit and I'm only getting $600 a month in rent. That's probably not going to work in my market. So that's how you've got to look at those deals and how do you do deal flow. And we go through that in the Jake and Gino community. So I love that tip. You got to put the work in. You got to commit to put the work in to underwrite those deals. And then one day, John, you're going to come to Gino and say, Gino, this deal fell in my lap. I love to hear that word. When a deal falls in your lap, it's because you put in so much time and effort into it.
Very true. All right, John, you like I said, you're clearly an MIH guy. You're someone I want to be connected with. How can the listeners get a hold of you?
Yeah, definitely. Gino just mentioned my credibility book. That'll be in the show notes, but you can certainly reach out to me via email. It's john@durhamhillcapital.com. You can also feel free to call my cell phone. It's 812-486-6937. Love talking to people about deals and where they are in the market and how we might team up and make something happen.
Man, that's awesome. So, all right, guys, I want to thank, John personally for being an amazing guest on the show and sharing his Movers and Shakers story. Now, if you want to be the next Movers and Shakers guest, email me, josh@jakeandgino.com. If you like the show, please leave us a review. And until next time, let's make it a Movers and Shakers week. See you guys.
Thanks, John. Take care, everybody.
Thank you, guys. Appreciate it.